morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao and with me is Varun Hirimath. Let's kick off the show then by taking a look at the top headlines of this hour. First up, a robust rally on Dalal Street. Nifty has clawed back to 11,600 mark. It's primarily being led by banks, especially the private sector lenders, and even autos are contributing a fair bit to the gains today. Next up, talking about autos, you have Tata Motors that's in top gear. JLR retail sales numbers were given out last evening. Their retails have sold 50% on sequential basis. Encouraging China sales is also something that's providing a fair bit of fillip to the stock. China sales were up, in fact, close to 15% sequentially and almost 4% YOY. Of course, a bullish note also has come out from CLSA, which we'll talk about later in detail on Tata Motors. So the stock definitely in top gear, biggest gainer on the Nifty 50 index. Meanwhile, new MPC members were announced late last evening as well. You have the likes of Shashanka Bhide, Jayant Verma, Ashima Goyal, who have been joined in the MPC panel. The members have to now serve a term of 4 years. Moving on, some gloom ebbing for the likes of HDFC Ltd, HDFC Bank and IndusInd. All of them have shown good gradual improvement on a month-on-month basis. They've given out their quarterly update as well last evening. Varun will walk you through more details in the course of the show. And lastly, you have the multiplex unlock, a big development that's been much talked about and much awaited. The government has released an SOP for the multiplexes, keeping the multiplex stocks very much in the limelight. Varun, why don't you take us through what's happening in the markets right now?
Sure, Karunya. Thanks for reading out the headlines. The market breadth is really positive today. We have 35 of the 50 Nifty currently advancing heavily and just 15 declining. In terms of what's winning, we have a Tata Motors on the back of what Karunya just said. Huge surge in retail sales, up 7%. We have a HDFC Ltd up 6%. M&M up 3.5%, so a rural stock making it in there too. Then we have an Adani Ports up 3%. They've completed the acquisition of Krishnapatnam just yesterday. Then we have IndusInd Bank that's shining up nearly 3% on the back of that Q2 update. On the losing side today, it's clear it's IT. You have TCS, Infosys and Wipro all shedding. So taking a bit of a pause after TCS touched its lifetime high yesterday. We also have Hindalco, one from the metals pack that's sulking today, 2% down. JSW Steel, another one from the metal pack that's sulking today, around 1% down. So if you want to look at the overall indexes though, we're looking at very positive index breadth as well. The bank index is up over 1%. The auto index is shining up nearly 1.5%. The mid-cap index is up 0.4%, and the next 50 is up 0.5%. So across the board, Nifty is up 0.7%. We have good positive market breadth for the day. And it definitely appears that the bulls are once again in control of the trajectory of this market. With that being said, let's also get you the stock cloud for this morning. 10 stocks that we're flagging off for various reasons. While my producer brings that up, we have some banking stocks in there today. We have some motor stocks. We have some select stocks as well. So let's begin with the Tata Motors. 50% hike in retail sales. Really positive commentary coming out from there. So that's reacting very positively. HDFC Ltd, HDFC Bank, IndusInd Bank, all three shining. 3 Q2 updates, excuse me, all very positive. Liability franchises developing very well for these three. Sobha, again, retail sales expected. They actually blew past that number. Sales are showing a much more positive trajectory than what people expected. Adani Ports completed a Krishnapatnam acquisition yesterday. Indigo Airlines is also so much happening there. New management coming in, clearly a leader in aviation. Then we have Infibeam and Majesco, two smaller companies that we don't talk about too often, but from the IT tech sphere, which are also flagged off this morning. And then we have a GSFC as well featuring in the cloud today on the back of some corporate developments. So that's pretty much 10 really, let's say, stocks that are hogging the limelight today. And we'll be talking a little more about some of them as we go on.
Right. Meanwhile, Ashish Maheshwari and Kunal Bothra both are ready with us on the show. Good morning, gentlemen, and thank you so much for taking time out. Kunal, coming first to you, the markets touched 11,600. Do you see us retreat from those levels, or could we perhaps be looking at a good rally or the bull run or whatever it is of sorts to continue?
Yeah, bull run, you can call it an uptrend as well in more subtle words. But net, I think it's a very strong recovery. Now, the last 6 days or seventh day, I think if I'm not wrong, this is the seventh day of the recovery. from the September end lows. I think there's been something quite different than the markets have seen in the last 5-6 months, because there have been a strong mix of sectors which have started to participate. The defensives, the ITs, the pharmas, FMCG. You have all of the sectors which is participating one by one. I think except for the oil and gas stock, which is more of news based or news flow or driven kind of sector moves. I think other than that, almost all of the other sectors and stocks have started to participate, and that's a healthy sign, because when you look at it on an overall basis the last 6-7 days, I think many sectors are now trying to participate one by one. Let's take an example. Yesterday the Nifty IT and the metal index were up extremely strong. You had individual names, large cap names into these pack, which did pretty well. And today you have completely new sectors. You have the auto stocks doing pretty well. You have Bank Nifty, which is moving up higher. You have individual names. I think I saw some real estate stocks as well moving up higher. So you have those different set of pockets. So the Nifty is moving up higher, and it's also having fresh sectors and stocks which is leading to the upside. So I think that's a very good I would say market mix. Now coming to the individual stocks, I would recommend two buys over here. First one would be a buy on HDFC Life. I think it's a very interesting chart in the making. Insurance stocks are yet to participate, and I foresee that many of these insurance stocks could now start a very strong uptrend from the near term to medium term. So I think HDFC Life could be an interesting pick from current levels, targets of 610 at least, and stop loss could be kept at 565. I would term this as a more of a low risk trade. Come to the other space, from the housing finance companies, I think one of the other stocks which looks extremely attractive, I've been vocal about this stock earlier as well, almost a month back, is PNB Housing. Now the stock has clearly broken those 200-day moving averages, all sort of required short-term breakouts, and I believe that the stock is now just about gaining and gathering very good strength on price patterns as well. So I believe that the stock should see a substantial upside even from current levels. Would term this as a high risk trade. It's a non-F&O stock. Buy on PNB Housing. Targets to be kept at approximately 400 and stop us at 322.
Right, that's Kunal's recommendations for the day. PNB Housing, HDFC Life. And his market views. I got a bit carried away there calling it a bull run, but definitely an uptrend which seems quite strong at the moment. Ashish, what is your sense on the fundamentals of the market? We'll be starting off the Q2 earnings season as well officially tomorrow. But how should one navigate the markets at the moment over the medium term to long term?
Yes, in my view, first of all, the global factors are quite positive as far as equity markets are concerned. So this is not something what really you are witnessing in Indian market. It is local phenomena. Worldwide markets are doing well, so we'll continue to do well because there's plenty of liquidity in the system which is flowing into emerging markets and other equity markets. Number one. And number two is IT and pharma. They are the ones which are going to take the lead once again in this quarterly numbers, like how we saw the last quarter. Again, in this quarter, they will set the mood for market going higher and higher. So in my view, I'm bullish as far as my personal view is concerned. And again, FI flows are going to come back in good quantity very soon. And IPO markets also, people are making money. So again, overall mood is quite buoyant in equity market per se, and I'm bullish.
Okay, thanks for that, Ashish. We read your lines pretty loud and clear. You're definitely a bull today. Keeping that in the backdrop, let's move ahead. Queries we have, two this morning. The first one about a stock that was really in focus yesterday, TCS. And we have Marvin Paul from Mumbai writing to us. He wants to invest in TCS at the current price. However, it's just been on an upward trajectory. So he'd like to know if he should enter or if he should wait for perhaps a correction. And maybe given that TCS's valuation is very high, is Infosys maybe a better bet for now? So Kunal, what do you have to say to Marvin? Should he look at Infosys or can he look at TCS at the current price, or should he wait for correction in TCS?
So I think it's a mix of all of the questions. So first of all, we were discussing this extensively yesterday as well on the show, Varun, that many of these IT stocks look extremely attractive, and now I think it's a problem of plenty because you have so many stocks on the large caps and the mid cap fronts which are looking attractive, and they hold potential for giving strong gains on long term time frame charts. I think I would agree that both TCS and Infosys also on the large cap front, they look attractive. But in terms of timing, or in terms of entry price, I think if you use some technical triggers, then a retracement towards a 50-day moving average has been a general phenomena where excuse me, where you see stocks which generally go through a corrective phase. Now for TCS, just as an example, the 50-day moving average is at 2,400 levels approximately, and the stock is at 2660. So given some time correction, I believe that a 2500 or a 2450 mark could be a very good entry point for TCS. Such kind of time corrections, it generally takes almost a month for the stock to come by, and that becomes an attractive buy. So I think rather than buying the stock at the highs, it's better that you start buying the stock at retracement. You would get those time-wise corrections or price retracements if you're a patient investor. So I think that's point number one. Point number two, yes, Infosys is also a very good buy. But then I think if you want to just about add on to some slight high beta large cap name, then why not look at a stock like Wipro? I think at 320ish approximately, I still believe that the stock holds a lot of potential of strong gains on the upside. So yes, I believe IT stocks are good to buy. TCS and Infosys are also good, but wait for retracement towards 50-day moving average, and why not add even a stock like Wipro from long-term view.
Okay, Ashish, how are you reading into the fundamentals of TCS? Of course, it comes with a very solid pedigree, very historic, solid historic financials as well. So going forward, what would be your advice, and when would be, or what value will be an attractive one to enter into this one?
See, first of all, we need to see IT sector as a whole. In my view, post-COVID scenario or during COVID scenario, a lot of companies have moved a lot of spending towards IT. So this is the reason all IT stocks pan-world are moving up, and they are generating tons of the cash. And this is the reason why TCS is again going to buy back their stock. Majesco is doing buyback. And you may see soon more buybacks also coming in this particular space. So this particular space will continue to gather more momentum going forward also. And today's correction, though TCS and Infosys both have touched 52-week high today and correcting from here, which is quite logical that we have seen a decent run up in both the stocks. But such opportunities, but I count this fall as an opportunity to accumulate such stocks, because today they are slightly down, but tomorrow again they are going to lead the market per se. So I am expecting even the buyback price in TCS will be around 3,000 rupees. So this will be a good time to enter into TCS. If it corrects by 20-30 rupees more from here, you are surely going to make money in TCS. And as far as Infosys is concerned, another 20 rupees fall from here will again give you good opportunity to buy this particular stock also.
Bring on board our next viewer query. Neville Bose from Mumbai writes to us. He wants to invest in Indian hotels. Is it the right time to enter? And are Chalet, Lemon Tree, EIH more suitable if you compare the overall, triggers in place, the kind of fundamentals each and every company comes with, and the future prospects, of course. But first, let's talk technicals. Kunal, the stock has seen a fantastic rally from its May's lows, and we've seen some HNIs as well buying big and loading up of shares of Indian hotels over the last few months. How would you see the chart's trajectory panning out from the current levels of about 102 odd rupees? Which way is it headed?
So I think yes, Indian hotels looks very, very promising and attractive. Currently, I think since last year, I think 2019, when things were pretty smooth and okay for major markets and even our markets as well. I think the stock was perched at 160ish. It went through a time correction, and come this correction in Feb and March, you saw even this stock correcting sharply. Now I believe that 100 plus levels, I think Indian hotels is a good buy from long term view. We've seen stable trends for the stock price, and I believe that those stable trends could eventually lead to a very strong upside. So you have to be patient investor. You have to have a time horizon of at least 2 years, 3 years plus on Indian hotels.
Okay, thanks for that, Kunal. Ashish, what's your view on the same query? Do you like Indian versus an EIH, or do you think even Lemon Tree and Chalet could be looked at?
In this space, I like two stocks. One is Indian Hotel, being leader in the industry and quite geographically diversified portfolio what they are having. This is naturally my bet number one in hotel sector. And what's the trend is going to change now, as not too many people are traveling overseas. So a lot of domestic travelers are going to take vacation in domestic circuit in this year. So once this unlock down 5, which is happening now, a lot of people have started already moving, and hotel occupancies have seen a big surge already. So my view is to buy Indian Hotel at this point of time. Already stock has appreciated from 60 odd levels to 100, but it's still from 52-week high of 160. It is still 60 rupees cheaper, and gradually I'm expecting that. In September quarter, they are going to be EBITDA neutral per se, so they are not going to do any loss. So this is my pick number one. And in mid market size space, I like to go with the leader, which is Lemon Tree, available at just 28 rupees. Again, down from 65, 67. It used to quote pre-COVID times. But again, in 3,000, 4,000 rupees per night key segment, this is going to perform really well in coming time. So only thing is, in hotel industry, you need to have slight patience. But in my view, bottom has arrived, and safely you can accumulate both these stocks at current price.
Okay, Ashish, thanks for that. Earlier on in the conversation, you never really gave us your current market perspective, and maybe you didn't share your high risk and low risk idea. Could you just reiterate that for our viewers, please?
Yeah, sure. My high risk idea is Trident Limited. This is again world leader in terry towel segment, and one positive thing has happened is they are back to their pre-COVID production as well as sales in present quarter. So this is a very low debt company, and in my view, the kind of strong management and portfolio what they are having in exports, where they are already exporting almost 75% of their production. This is a stock which can really give good return as far as textile sector is concerned. So I'm advising you to buy with a price target of 11 rupees. And mind it, this is not a penny stock. This is 1 rupee paid up stock. My other low risk pick is going to be Route Mobile Limited. In my view, this cloud communication company, which has already given very fantastic returns to its IPO subscribers, will continue to do well. Because nowadays, in your life, you can't live without getting those OTPs several times a day. So this is a company which has relationship with almost all MNOs and work with almost everybody in telecom sector. So this is again a stock which will continue to grow with a very high CAGR, at least for next few years. So the kind of return we have seen in Dexion Technologies or India Mart, you may expect same kind of returns from Route Mobile. And so this is how I count it as a low risk kind of a stock. And my target for this stock is going to be 1,000 rupees in next few months.
Okay, all right. Thanks much for sharing with us your ideas as well, Kunal and Ashish. On that note, thank you so much for joining in and helping our viewers out as always. Meanwhile, the wait for all the movie lovers and movie goers seems to be over. The government has released finally an unlock SOP. Let's take it across to Karishma to understand what exactly are the rules and regulations that the multiplexes will have to stick to. Karishma.
Well, it's a 6-page SOPs that have been released by the INB Ministry, and we're talking about some a new form and a new way of enjoying your movie. Well, the auditorium now is going to be only working with a 50% occupancy capacity. Besides this, they're going to be not to be seated markings that are going to be placed on seats in order to maintain right kind of physical and social distancing. We know that it's after 5 months that this relief has more than 5 months that this relief has come to the multiplexes, and also people who've been thriving to get back. Important points is that, of course, physical distancing, social distancing, compulsory masks in order to enter. Certain changes with the kind of food that you can consume, only packaged food to be allowed inside. That is, no live counters, no delivery will be given inside the food theater. There's going to be a proper queue system. Digital ticket is encouraged, and more counters will also be set for people to take. One other significant point is that they're going to be staggered movie timings in order to keep up with the social distancing and safety norms. Well, not to mention, but goes with the saying that masks, sanitizers compulsory. There's going to be also regular interval sanitization of the box office to keep up with the safety norms.
Okay, Karishma, thanks much then for joining us with that update. Definitely some amount of relief coming by for all of those people who've been wanting to get out and watch some movies on the big screen, and of course for multiplex companies as well. Meanwhile, Sridhar Shivaram, let's quickly pull up the stocks as well for PVR and even Inox Leisure. Inox Leisure, I last checked, was actually trading a bit lackluster. Right now also continues to be down by about 1.8%. Let's also see how PVR is doing then. Even that one is muted in trade, down by about 1.4%. But moving away from that, let's also listen in to Sridhar Shivaram. He's the investment director at Inam Holdings, who believes that the ARPU in telecom sector will go up in the future, and this will be a key trigger for the sector, and thus he remains positive on it. Here's why.
We remain positive on telecom. Actually, we've seen some part of the move and then some correction as far as telecom is concerned. But we think from here on, it is going to be the ARPU game. I mean, India has a $2 ARPU. The overall telecom revenues 3 years back were about 2 lakh crores. Today, it's about 1,50,000 crores. And in this 3 years, data usage is up 10 times. Minutes of usage is up about 30%. So I think, and the dependence on mobile and data has only gone up. So we do think that over a period of time, this ARPU, this $2 ARPU cannot sustain. It will go up. And as it moves up, we will see that flow into the earnings of the companies. The next trigger for telecom has to be ARPU increase. In the interim, we'll see a lot of noise. But we remain positive as far as telecom space is concerned.
Hello and welcome back to Buy Now, Sell Now. As Karunya was pointing out earlier, Tata Motors has had an exemplary recent quarterly update. Retail sales are up 50%. On the same subject, we also asked Autocar's Hormazdi Sorabji what he thinks about Tata Motors. Let's listen in.
For me, the real hero is Tata Motors, because if you see in terms of product lineup, they don't really have a full lineup as like their competition does. Still a lot of gaps, but they've sold more cars in September than this has been their highest in 8 years since 2012. So that really is a phenomenal achievement in during the pandemic. And again, clearly goes to show that, you just need to fix the fundamentals, right? And, here I would, call out Shailesh Chandra as a man who's really changed things around, because he's come and taken charge of the PV division. He's sorted out issues which they had with the dealers, rationalized prices. So, you just had to do some basic stuff and, you get the results immediately. Of course, they've got products in terms of, let's say, the Harrier auto, which it was desperately, they needed an auto. Now it's the only diesel with an automatic in that segment. No one else has one. Compass is there, but it's a lot more expensive. You've got the Altroz, which is doing well. But again, I think, the PV division, which I think spearheaded by Shailesh Chandra, I think they've done a fantastic job, because, after he came in, things just quickly changed. So I think, they've done a fantastic job. And I think now Mahindra were really clearly on the mat. Now with the Thar, they'll go forward. So I think it's more in the mass segment. And of course, Maruti is just never ceases to amaze because no one knows the customer better than Maruti does. That is, indisputable. They know the pulse of the customer so well, and they serve them just perfectly. No more, no less. And no more, that's how they make their profits. And no less, and that's how they keep, they have them with them. They have that loyalty with them. So again, Maruti really a star. And then you've got the Koreans, which is the new phenomenon, both Hyundai and Kia fighting with each other. And, with that fight, they are taking market share up themselves. So clearly, the sense I said, just to sum it up briefly, you're going to see the strong get stronger and the weak, they may not, have that much of the pie left. Yeah.
Meanwhile, look at the way the stock is flying in trade. It's the biggest gainer on the benchmark index, and the quantum of gain is quite phenomenal, almost up 8% as we speak. JLR had reported its numbers, its retail sales numbers for the second quarter last evening. Their sales for on the retail front have gone up by 50% on a sequential basis, on a QOQ basis. They've come in at 1.13 lakh units. Versus 74,000 units sold in the previous quarter. Meanwhile, overall, if you look at a YOY picture, yes, retail sales still continue to be weak. They're down 12% from pre-COVID levels a year ago. But look at how China has seen an improvement, which continues to be one of their most important and critical markets. China sales were particularly encouraging. On a QOQ, they've seen a 14.5% improvement. On a YOY, they've seen a near 4% improvement. If you look at individual sales for the month of September as well, they were up 28.5% in China. And other regions also, the company has stated that they've seen a significant improvement on a QOQ basis. You have CLSA coming out with a bullish note on Tata Motors. They maintain the buy rating target at 220 rupees a piece. They've also reiterated the fact that JLR has turned free cash flow positive in the second quarter. China and UK markets are driving the recovery for now. Cost focus had already started to show some, benefits in Q1 itself, and this trajectory or this benefit from their cost rationalization is something that will be a key trigger, a key monitorable to watch out for in Q2. Sequential volume recovery and cost cuts. These are the two elements which will, according to CLSA, drive the FCF turnaround. JP Morgan has also come out a note. They've maintained underweight trading. Target that they have given is 90 rupees. JLR volume recovery is encouraging, they say, but it does still continue to lag versus peers. They need better clarity on the deleveraging roadmap as well. Well, it continues to be a concern for many on the street, but for now, the market seems to be rejoicing the numbers they've seen on the retail front, especially in the China market. So good gains coming there for Tata Motors.
Okay, thanks for that, Karanya. Now we all know why Tata Motors is really rebounding and the stock price is acting the way it is. Two other banks that are also doing very well in trade today, HDFC Bank and IndusInd Bank. They recently put out a Q2 update, which mainly revolves around three factors: CASA ratio, advances, and deposits. Now, if you heard Rakesh Jhunjhunwala's interview with Nikunj recently, you heard him say the word deposit franchise or liability franchise at least 5 or 6 different times, because that's what investors are looking out for. So when you look at deposit growth of 20% for HDFC Bank YOY and 3% Q on Q, it goes to show that this is exactly why people prefer the large private banks, because the liability franchise is very strong. Now, even for IndusInd Bank, which is why you're seeing a good positive reaction, 10% YOY growth in deposits to 2,28,000 crore. That's no small feat, especially given that IndusInd Bank was supposed to have experienced a deposit run. Q on Q as well, they've grown 7%. And for IndusInd, the key takeaway is that retail deposits have shot up to 75,600 crore versus 67,000 crore. So there's a 12 to 13% deposit gain on the retail side for IndusInd, which is very positive. HDFC's overall situation advances are up 16%. Q on Q, they're up 3%. So CASA has actually improved 200 bips to 42% versus 39.3%. So that's a really positive sign for both these banks. And now we should be getting a host or a flurry of these coming in. Bandhan Bank is usually the third to report. So we'll be keeping an eye out for that one as well. So that was banks. And now I think we're going to walk you through the latest at what's happening with Coforge on What's the Story, and my colleague Poonam is going to walk you through that.
Well, the Coforge stock hit record highs in trade. The stock has gained over 100% since March end, being the best gainer on the Nifty IT index, and the reason is management turnaround. In June 2017, Sudhir Singh was appointed as the CEO and CEO designate and then CEO, and he has in fact brought in strong order book visibility, consistent growth, strong guidance, and also strong execution, which has led the stock gaining nearly around 4.5x since his appointment. In fact, the company continues to command premium valuations versus its peers of nearly around 19% premium versus its mid-cap peers. Baring PE Asia acquired controlling stake recently and post the recent delisting of Hexa, where there is more interest in the stock. Even during a time of pandemic in Q1, the management provided for a strong guidance. They guided for an organic revenue growth of at least 7% quarter-on-quarter in constant currency terms, and at least a 150 bips EBITDA margin expansion over the last quarter for Q2. They have a resilient deal pipeline according to the management. They have executable orders worth $465 million over the next 12 months, thus providing strong visibility. The company focuses on emerging technologies and client mining. They have strong capabilities in digital integration, process automation, and healthcare is the new vertical that they have incubated, which will grow aggressively over the next 2 to 3 years. Analysts do state that there is a possibility of re-rating according to IIFL Securities. They are expecting an EPS growth of nearly around 18% CAGR over FY20 to 23.
Thanks for that, Poonam. Let's once again revisit the solid up move that we witnessed on TCS yesterday. India's largest software exporter, TCS became the second Indian company to cross the market cap of 10 lakh crores. Chandra Srikanth and Poonam Sani both have tracked the company's remarkable record in terms of wealth creation in this special report. Let's take a look.
Software major TCS became the second Indian company to cross a market cap of rupees 10 lakh crore, making it another feather in the cap for one of the country's most profitable companies and one of the biggest employers in the private sector. TCS, which became the second company after Reliance Industries to achieve this feat, said it will consider a buyback this Wednesday, in line with its long-term capital allocation policy of returning excess cash to shareholders. What started out as a division of Tata Sons in April 1968 is today one of India's most successful and respected companies. It is 52 years old, a feat that few technology companies have managed to achieve globally. In fact, TCS's record as a wealth creator stands tall when compared to its peers in the IT pack. Research from ET now shows that TCS has given the best returns since it listed among large caps when compared to peers such as Infosys, HCL, Tech Mahindra and Wipro. Tech Mahindra got listed in August 2006, so the returns have been calculated from that date. Analysts attributed TCS's obsession with driving processes at scale and a stable management that embodied the Tata culture as key reasons for its continued success. In its over 50-year history, TCS has had just 4 CEOs: F.C. Kohli, S. Ramadurai, M. Chandrasekharan and Rajesh Gopinathan, at a time when its rivals saw multiple succession issues and cultural clashes with external candidates. While analysts say TCS has perhaps been one of the most conservative when it comes to acquisitions, this has also helped it retain culture even as it scaled in terms of revenues and headcount. It ended FY20 with a revenue base of $22 billion and has over 4.43 lakh employees. It's been one of India's best performing stocks and is also one of the highest dividend contributors to the Tata Group, earning it the moniker Tata's Cash Surplus. It's also been a trendsetter in entering new markets such as LATAM and Japan, investing in platforms and adopting work from home at scale, with an ambitious target to have only 25% of its workforce work from office by 2025. While TCS's winning formula of processes with scale and a steady management helped it retain leadership for over 50 years, it remains to be seen what the post-COVID years and disruptions in digital hold for the crown jewel of the Tata Group. With Poonam Sani, Chandra Ashrikant, ET Now, Bengaluru.
That very interesting package, I think, helps us understand why TCS commands the valuation it does and why it is indeed India's largest tech company by far. But switching gears now to the Monetary Policy Committee, whose meeting will be starting tomorrow and carrying on till the 9th for the next 2 days. Ruchi is going to join us right now on 3 new members that have recently been indicted into this committee. And let's remember, it's very important, they direct the RBI and monetary policy decisions. Over to Ruchi for more on the new members.
Well, absolutely right. The RBI, the central bank, has announced their new monetary policy dates. This, of course, coming in after the government late last night told us that they have selected and finalized the 3 new members on the board for the monetary policy panel. In fact, we're given to understand the MPC meeting is now scheduled from October 7th to October 9th, which means the new MPC members, that is Shashank Bhide, Jayant Verma, as well as Ashima Goel, will be getting 1 day to decide what their stance is going to be. Having said that, the 2-day meeting will talk about the kind of macroeconomic situations that we are in at this point of time. Of course, the appointment coming in less than a week after the term of Chetan Ghate, Ravindra Dholakia, as well as Pami Dua, the 3 initial external members also got over. As we have told our viewers, this term is going to be for the new MPC members for a period of 4 years. Last week also the Reserve Bank of India, remember, had postponed their Monetary Policy Committee meeting, and which is why now the RBI saying that their new MPC meeting will be on October 7th to October 9th, which means the verdict of the Monetary Policy Panel will be on the 9th of October. Having said that, Shashank Bhide, currently the senior advisor to the New Delhi-based think tank, the National Council for Applied Economic Research, his areas of expertise include sectors such as agriculture, macroeconomic modeling, infrastructure, and poverty analysis, while Ashima Goel, who's also a part of the Prime Minister's Economic Advisory Council, looks into macroeconomy, international finance, financial markets and regulations, as well as institutions and development as well. However, Jayant Verma, the professor at IIM Ahmedabad, looks at the capital markets, fixed income and alternate investments, these areas very closely. So really it's a balanced a panel that we have so far, along with, of course, the other 3 members, including the RBI Governor Shaktikanta Das, as well as ED of the Monetary Policy Committee, that is Mridul Sagar, as well as the Deputy RBI Governor, that is Michael Patra, will be the other 3 members. Of course, all eyes will be on what kind of rate action are we likely to see in the next Monetary Policy Committee, given the fact that inflation pressures are continuing to rise and persist as far as the Indian economy is concerned.
Okay, Ruchi, thanks much for joining us with that very important update. The meet is scheduled to start tomorrow. It's going to go until the 9th of October, that's Friday. Slipping into a break here, more updates when we come back. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now. And as always, we've got a very exciting quiz for you this morning as well. We've got a lot of replies as well on our Twitter handle. Here's what we had asked our viewers and Twitter followers today. Which of these retail companies has posted the highest revenue CAGR over the last 5 years? Page Industries, V-Mart, ABFRL and Trent. Here's the answer, option B, V-Mart. And today, as far as our quiz champions are concerned, we've only been able to get one correct answer from Jay Shan. So he is the winner of today's quiz. Thank you so much for all others who wrote to us and who reached out with their responses to us.
Okay, hopefully you keep those responses coming in and we get more and more winners so you can be featured on the channel. But it's also time now to bring on board Jayesh, who's as usual got a very interesting insight for us. How have analysts revised their target prices during the month of September? Let's listen in.
Market analysts have upgraded more than 75% of the stocks that are currently under coverage by a minimum of 10 analysts, while on the other hand they have downgraded just about 16% stocks that are under coverage, and 6% stocks have seen no change in their target price for the month gone by. As far as sector specific action is concerned, you have none of the sectors which have seen a downgrade, and you have communications and consumer discretionary that have seen the biggest upgrades, 6 to 8% for these stocks, while you have technology also which has seen a 5% upgrade for itself. The other sectors which have seen upgrades are the healthcare, industrials and real estate pack, while you have seen consumer staples as well as utilities where the target prices have remained largely unchanged. As far as stock specific action is concerned, there's a lot of large cap stocks that have seen upgrades, starting off with Jubilant Foodworks, more than 30% upgrade for that one, and Jubilant Life Sciences also more than 25% increase in its target price, where you have Info Edge, Dixon Technologies, Credit Access Grameen along with Yes Bank that has seen an upgrade of 12 to 14% each. But what's interesting is the Nifty names which are at the bottom of the pack, Dr. Reddy's, Tata Motors as well as HCL Technologies. These three Nifty names have also seen a 10% increase in their target price for the month of September itself. Talking about the stock downgrades, there's quite a few Nifty names that feature in this list too. ONGC, Coal India and GAIL which stand out over here, 2 to 4% downgrade in their target price, and you have Canara Bank along with GSPL which has also seen downgrade of about 2 to 3% each.
Okay, Jayesh, thanks much for joining us with ET Now Insights. Meanwhile, of course, as we all know, it is the beginning of the month and many of you may have received your monthly salary as well. The question is how you can utilize this money in the most efficient manner, especially as we're in the midst of a tremendous amount of economic uncertainty. On the Money Show, we caught up with Brajesh Dalmia of Dalmia Advisory to help you navigate the rough waters smartly.
Yeah, I think, things have fundamentally changed in the last 6 to 9 months. And what everybody should do is this, that they should divide their monthly income or salary in 3 buckets. So let's say the first bucket is the non-discretionary expenses, which are day-to-day living expenses. Then the next bucket should be savings bucket. The amount of money you want to save for your future. And the third bucket should be discretionary expenses which are your wants, which are not kind of need. So on a mental level, people should have 3 buckets of allocation of their salary. So the first bucket should be around, let's say, 50%. They should be prepared to expend on their day-to-day needs. And then what makes important at this point of time is that many people have lost their job or there is a salary cut. And so the savings has gone down. So it is very, very important that you should now think about at least 20 to 30% of your monthly salary to be earmarked towards savings and investment. And you should put this money away the moment you get that money in your bank account. So maybe you can do some SIPs or maybe park your money in a debt fund, but the first 20 to 30% of the money should be blocked so that you don't consume that probably the way you may be doing it in earlier times. So you can write it down at a place that how much you want to save and how much you want to spend and have a budget kind of thing. But primarily create a 3-bucket system that the first bucket will be 50%, which will be used for your cost. The second bucket could be your savings, which is 20 to 30% of your net salary after taxes. And the last bucket, if you have any discretionary expenses, you can use it for that. If you apply this process, probably it will help you a lot going forward.
Brajesh, I'm glad you mentioned the order of the things, because many a times all of us have this tendency that, okay, I've got my salary and hypothetically, let's assume it's 50,000 rupees per month. What I mean, and I'm sure a lot of people do that. What I would do is I would, first spend off all the money, and then whatever is left, I would be like, okay, I have this extra left, so now let me consider saving it or, investing it. So how important is it? How important is it then to follow that order of what you've mentioned and follow the other way around, where you actually first invest and save and then manage your expenses in the balance?
I think very important. It will give you a lot of peace. The moment you separate the first pie of savings and investment, it will give you a comfort. It will give you a mental peace that, look, I have saved money and I'm saving money month-on-month basis. So 20 to 30% money, if you take out from the system, you now have a mental state of mind that whatever is left, I have to live my life on that, because I cannot spend the entire amount of money every month, because if there's nothing left and there is some sort of emergency, or if there is a job loss or pay cut, then how will I deal with this? So my sense is this, that if you take a part of your money out day one, that is first of every month, if you take 30% of your income out of the system, and
Okay, completely out of time here, and buy now, sell now. Thank you so much for tuning in.